I want to highlight a few common mistakes that contractors make in budgeting. These mistakes, each one of them on their own are enough to wipe out a 10% profit margin. You could go through all of this, all of the motions and the exercise of doing this and still miss. And I want to help you kind of avoid some of those common pitfalls. If you do decide you want to use SynkedUP, you get a dedicated financial coach in your back pocket, like an actual industry expert that's been in the industry for 30 plus years that will help you build your budget looking over your shoulder. So if you're like not sure, or kind of shaky in your confidence of doing this on your own, just know that when you do decide to use SynkedUP, you get an expert helping you, looking over your shoulder, making sure that that is dialed and you're actually charging the right rates. And you're avoiding all of these mistakes that I'm going to go through. First one, not recovering equipment costs. I have heard so many times, oh, that piece of equipment doesn't cost me anything, I paid for it. The only thing it cost me is repairs and maintenance. Nope. Why is it not true?
And you got to replace it.
And you got to replace it. Might not be this year, might not be in the next 5 years, but you got to replace it. When I buy a $100,000 machine and I keep it for 10 years, what's it worth at the end of those 10 years? Throw a random number out. 20 grand? Who pays for that $80,000 difference? You do. It's called depreciation. What it means is if I buy a $100,000 machine or a $3,000 leaf blower or whatever, if I buy that machine, the $100,000 machine for easy math, and I keep it for 10 years, I sell it for 20 at the end of that life, and I replace it with another $100,000 machine, or maybe 110 now for inflation, the delta, the 100 minus 20, equals 80. Take that 80,000 divided by 10 years, 8,000 a year. That machine cost me $8,000 a year. But the reason it is so tricky is because assuming you did pay cash for that machine when you bought it new or whatever, that $8,000 a year does not appear anywhere in your bank statements or your profit and loss statement. That's why it's so tricky. It's technically invisible. Unless you're to the degree where you're reading a balance sheet, then it's not. But even there, depreciation from a tax and balance sheet perspective is different from a depreciation in a production capacity. And the way I like to think about this is everything that you own, every truck, trailer, piece of equipment, even like an IQ saw or paved tool equipment, like anything that you have that's a significant expense, what's it cost me to buy? How long am I going to use it? Is it going to be worth anything when I replace it? And the idea is then it just mathematically takes this invisible expense and counts it into the cost of running your business, and it gets recovered in your rates. Next one, not documenting every penny of overhead. How many of you have ever tried to do a household budget? How many of you have ever successfully spent less than you had budgeted? The point I'm making is we always spend more money than we think we do, and it's especially true in business. Oh yeah, I forgot about those t-shirts for the guys. Oh yeah, I brought my team here to this event today and I paid them on payroll. Oh yeah, I forgot about XYZ. I forgot about the Christmas gifts I gave to clients. This is death by 1,000 cuts. Unfortunately, the only answer is yes, a fine-tooth comb exercise. Like, make yourself a cup of coffee, shut your phone off and sit down at your desk and just go through wherever your information is, whether it's in a credit card statement or a bank statement or a profit and loss statement, whatever. Just go through it for the past year and be like, where did we spend money? Like, let's say the whole thing's $800,000 we spent. Okay, well, what was it for? Every dollar that my business spends has to be in this budget. Why? Because every dollar that my business spends that is not in here, who pays for it? You do, the owner. I forgot that overhead expense, and I'm taking money out of my profit bucket and putting it into my overhead bucket to cover all of those things that I forgot, and at the end of the day, what do I have left? Nothing. I worked hard all stinking year, and I have nothing. So hopefully that's enough of incentive to, yes, do the thing that nobody loves doing, looking over statements and plugging in numbers. Another one that is invisible is not factoring in unbillable hours. Employees show up on a rain day and it's like, well, I don't know, service the equipment and wash the trucks and go home. So they work for half a day and they go home. Who pays for that? You do. What you do see and what is visible is the big fat payroll deduction every week or every other week out of your company. But what you do not know is what percentage of that was unbillable. And that unbillable slice is kind of invisible. It is invisible unless you track it, like what we said a couple minutes ago about employees. If you're working, you have to clock in. And I have to know what you're working on. Either it's to a job or it's to an unbillable shop time something. Every minute that you're getting paid on payroll has to be tracked to something. There is no such thing as general, miscellaneous, blah, 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 blah. That doesn't even exist. I actually need to update this slide because I said the average landscape company has 10 to 15% of their field labor unbillable. I would say a highly efficient company is 10 to 15%. A more like typical of like, I haven't been tracking it, so I don't know what it is typically more like 20, even up to 30%. Not paying yourself as an owner, I touched on this a little bit. Just remember, the company's profit is not your pay. The company's profit, as the owner, you get to do with as you see fit, but that is separate from your pay. In a business, salary is for what the individual does on a daily operations basis. Net profit is what the owners get as a reward for the risk they incur in owning the business. And it could be that it's the same person. You're working in the business daily, so you get a salary for that, and you own the business, you have the risk, so you get the net profit from that. When I say market rate salary, some of you are doing the work of 2 or 3 people. Like if you broke a leg tomorrow and had to stop working, you'd have to hire 2 or 3 people to keep the business going at the same level that it is today. The mental exercise to solve this problem is, if I stopped working tomorrow, who would I have to hire? All right, make the list, 1, 2, 3 people or whatever. What is the market rate salary for a salesperson, ops manager, office admin, all the people that I would have to hire if I stopped working tomorrow? Okay, add all those up, that's what goes in the budget. I don't care if you don't pay yourself that. It's your money either way, whether it's in the profit bucket or in the salary bucket. What I do care about though is the budget is pricing your work as if it's paying you the market salary that you should be getting paid. If you decide to live on a gas and rent type of household budget, sure, knock yourself out. Go ahead. I respect that. You know, you want to maybe grow the company debt-free or whatever, but what needs to be in the budget is market rate salary. What you actually do on salary in the IRS eyes is up to you. Another one is not updating your budget regularly. You can go through all this work and all of these exercises and still swing and miss. Why? Because things are constantly changing. Insurance went up. We started a marketing campaign. We hired an office admin. We did blah, blah. You did the budget here in January, and by April, you're spending $3 grand more a month than you were when you did it in January. Every dollar your business spends that the budget doesn't know about, who pays for it? The money comes out of your profit bucket and goes into that overhead bucket to cover those expenses. And so the idea is you can't stay on top of this enough. You know, if you make it a once a year thing, it's gonna feel like a big chore. If you make it I check it for 10 minutes every week thing, it's gonna feel easy. Annually is better than never. Quarterly is better than annually. Monthly is better than quarterly. Weekly is where it's at. I just want to say thank you for having me here. And thank you, Dan and Nick and the Ideal team. I really appreciate it. Appreciate the opportunity. And I had fun. And I hope my goal is that somebody goes home and makes more money this year because of something they saw. That's my goal. If that happens for you, shoot me an email. Let me know. It's so much fun to hear that. Thank you.